Dirty dealings, corporate battles, consumer wars. This is Evening 5. Malaysia's central bank liberalised foreign exchange rules to make it easier for international financial institutions to issue ringgit-denominated bonds and sukuk here. Under the change, multilateral development banks and non-resident development financial institutions are free to issue ringgit-denominated debt securities in Malaysia and provide financing to domestic corporates. According to Bank Negara Malaysia Deputy Governor Adnan Zailani Muhammad Zahid, these institutions previously had to seek prior approval from BNM. BNM Governor Datuk Sri Abdul Rashid Ghaffur, meanwhile, shared that easing the red tape will widen the financing opportunities by reducing currency mismatch risk while attracting more global issuers and international investors. The two men were speaking at the central bank's press conference in conjunction with the release of the country's latest gross domestic product numbers. According to the data, Malaysia's economic growth decelerated in the third quarter as expected, though the pace remained brisk thanks to resilient investments, higher exports and expansion in household spending. GDP grew 5.3% year-on-year, matching the median 5.3% rise predicted in a Bloomberg poll of economists, but a tad slower than the 5.9% in the second quarter. BNM expects the economy to expand 4.8% to 5.3% in 2025. The US Treasury Department dropped Malaysia from its monitoring list for extra foreign exchange scrutiny. According to a Reuters report, the department had China, Japan, South Korea, Taiwan, Singapore, Vietnam and Germany on its monitoring list. Bank Negara welcomed Malaysia's removal, which affirms the ringgit's market-driven status. Governor Datuk Sri Abdul Rashid Ghaffur said Malaysia has never used exchange rates to gain a competitive advantage in the market, so the US Treasury's decision reaffirms its position. On the strengthening of the local currency, he said the ringgit remains supported after appreciating 14.9% in the third quarter of 2024. The rise was mainly driven by the monetary policy shift by the US Federal Reserve, as well as Putrajaya's structural reforms and ongoing coordinated efforts by the government and the central bank. The narrowing differential with Malaysia's interest rates is expected to further support the ringgit. A consortium led by Khazanah National and the EPF made a formal takeover offer for Malaysia Airports Holdings or MAHB at 11 ringgit per share after securing regulatory approvals. The consortium is now announcing their firm intention to buy all remaining shares of the airport's operator. The offer values MAHB at nearly 38 times the 2023 earnings. It is still conditional, requiring the consortium to own at least 90% of the company, including shares already owned on or before the closing of the offer. The consortium and its related companies collectively hold 41.1% in MAHB, which manages 39 airports nationwide, including 5 international airports and 17 smaller airstrips. The group also owns 1 airport in Istanbul, Turkey. If the takeover is successful, the Malaysian members of the consortium will hold 70% in MAHB, while foreign partners Abu Dhabi Investments Authority and Global Infrastructure Partners will have the remaining 30%. CIMB Securities said the proposed merger between Bumi Armada and MISC's offshore businesses is expected to result in MISC holding a 68% stake in the new entity, with a combined valuation of 14.6 billion ringgit. CIMB's estimate is based on MISC's offshore business valuation of 10 billion ringgit at the equity level, compared to Bumi Armada's valuation of 4.6 billion ringgit. The research house said in a note today that it believes the immediate focus post-transaction will be on integration and extracting synergies from the merger. Should this merger materialize, it could generate operational synergies for the combined entity, which is well positioned to strengthen its presence in European regions such as the UK North Sea. Furthermore, it would expand opportunities in other promising markets, including Brazil and Angola. Analysts are largely neutral on the deal so far, highlighting several downside risks, which include the complex integration of business models, systems and processes, higher merger-related costs, potential regulatory hurdles and external challenges. Still, MIDF Investment Bank noted separately that given the longer period to continue talks, both parties would find ways to mitigate the risks, while ensuring that stakeholders will continue to reap the benefits from MISC's dividend play. Fertiliser manufacturer Cropmate has unveiled the prospectus for its ACE market initial public offering to raise up to 52 million ringgit as part of its plan to purchase new factories and expand operations. The IPO, priced at 20 cents per share, entails the issuance of 210 million new shares and an offer for sale of 50 million existing shares. It offers investors up to 35% in the company. Application for the IPO closes on November 22nd, with the company's listing scheduled for December 5th. Cropmate is mainly involved in the formulation and blending of conventional and specialty fertilizers and also trades straight fertilizers. Established in 2018, the Selangor-based company has 4 blending compacting production lines with an annual capacity of up to 214,000 tons of fertilizers. At the offer price of 20 cents, Cropmate would have a market capitalization of 147.6 million ringgit, valuing the company at about 14 times 2023's earnings. The company made a profit after tax of 10.05 million ringgit for the financial year ended December 31st, 2023.